So we had discussed it briefly, but we're going to repeat what we discussed, and then we'll do another question on it. So we said in addition to making the normal profit and loss account, you also need to make appropriation account. So we also need appropriation account here. We also need appropriation account. So you'll make the profit, then you'll come up with the income statement the normal way you prepare the statement for sole proprietor. So the income that you get, the profit that you get, we call it profit before tax. Profit before tax. The normal profit that you generate when you're making the incomes for sole proprietor. Then you less tax. If the question has not given you the figure for tax and you're doing company accounts, then it's 30% of the profit. If you have not been given the tax itself, the figure that you're supposed to deduct as tax, you take 30% of this amount that you'll have got as your profit. And then thereafter, you get what we call profit after tax. Profit after tax, this one. Then now you less dividend, you less preference dividend. So there's a proposed, there's a paid dividend, you less, and then there's a proposed dividend, you less that one. There is also ordinary dividend. Ordinary dividend, there is a paid, you less that one. And then we have the proposed. And then you also less transfer to general reserves. Transfer to general reserves. The figure that you get is called retained profit for the period. Retained profit or retained earnings for the period. Retained earnings for the period here. Then you add retained earnings balance brought down. So you get what we call the retained earnings balance carried down or closing balance here. So that is how we prepare the appropriation account. So in addition to preparing the normal profit and loss account, you also need to come up with the appropriation account. So we can see here we are getting new terms. We are getting new terms that you're supposed to know. So there is what we call ordinary shares. Ordinary shares, definition of terms, ordinary shares. And then we have preference shares. So the capital of a company is subdivided into small units called shares. And we have two classes of shareholders. We have the ordinary shareholders and preference shareholders. Ordinary shareholders, we said, are those shareholders who hold shares that give them a right to vote in the company's meeting. And then they are paid part of the profit after the preference shareholders have been paid. So these ones hold the right to vote in meetings, and then they are paid part of the profit after the preference shareholders, isn't it? Then those preference shareholders are those shareholders who are paid part of the profit before the ordinary shareholders are paid. So these ones, they have the right to vote in meetings, and they are paid their dividend or the part of the profit after the preference shareholders have been paid. So that is the difference. Both of them are shareholders in the company. And then we have dividend. Dividend is part of the profits that is paid to the shareholders for their investment, for their capital invested in the company. That is dividend. So we said we have two types of dividend. We have preference dividend and ordinary dividend. The paid dividend, these ones have already been paid. Part of the dividend that's supposed to be paid to the shareholders, which has already been paid. You will get it in the trial balance. The one that is paid will be in the trial balance. And the proposed one is that portion of the dividend that is yet to be paid. This one always you'll be directed in the additional information. So how do you determine dividend to be paid? There are two ways in which you can determine the dividend to be paid. So in most cases, you get that they can give you the rate of the total capital. For instance, we have 10,000 ordinary share capital. This is the ordinary share capital. Maybe each share is valued at 100 shillings. So this is the total value of the ordinary share capital. So we want to know the dividends. In some question, they'll give you a particular rate, maybe 6%. So they can give you 6% of the entire capital value. So you take 6% of 10,000, isn't it? That one will be dividend. In some other question, they'll give you the amount to be paid for each share held as dividend. They can give you maybe 50 cents per dividend, isn't it? So now here, you'll be given the value per share. For instance, here we're saying each share is valued at 100, isn't it? So we'll need to determine the number of shares, the total number of shares. So one share here, they're saying, is equivalent to 100. Then you ask yourself, if you have 10,000, well, how many shares would that be? So you subdivide 10,000, you divide by 100, you get the number of shares. Then you multiply by the amount per share that is given as dividend. That is how. So those are, then another thing that you can see here, we also have reserves. Reserves is part of the profit that is set aside for any purpose. General reserve, any amount that is set aside from profit to cater for any purpose. So most companies, reserve is part of the capital. So the one that is indicated in the trial balance has already been deducted from the previous profits. And then you'll come and add to this one that you're deducting in the current profits. Both of them, you will take them to the statement of financial position as part of capital. This proposed dividend is a liability, should be indicated in the statement of financial position as a liability because not yet paid. Even this one. And then the tax, you pay this year's tax next year, isn't it? Because you're determining this one at the end of the year, so probably you not have paid it. So tax is also part of a liability, which should be indicated in the statement of financial position. Let us look at a question, May 2017, sorry. Let us look at May 2017. We're looking at a question on company account. May 2017. May 2017. Is it May 2017? Sorry, November 2017, question number 4. So we want to look at example, November 2017, question number 4. 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 So I'm going to read the question because you also have some online students. How many of us do not have that question? Nani Anna? So we shared this in the group. We have the soft copies, papers, isn't it? Sinikweli. So I expect everybody to be having. Kama una utaniona after class. So the question reads, November 2017, question number 4. The following trial balance was started from the books of Nightshade Limited as of 30 September 2017. So we have the trial balance given, and then we have additional information. Additional information number 1, goods costing 710,000 purchased on credit on 29 September 2017 were in transit and therefore had not been entered in the books by close of business on 30 September 2017. Number 2, inventory as of 30 September 2017 was valued at 112,300,000 shillings. Number 3, a debtor who owned the company 1.5 million was declared bankrupt. His debt has not been written off. Allowance for doubtful debts is to be set at 2% of the outstanding receivables. Number 5, depreciation is to be provided on motor vehicle at the rate of 20% per annum on costs. And note number 6, as at 30 September 2017, outstanding motor vehicle expenses amounted to 125,000, while prepaid insurance amounted to 1150,000 shillings. Number 7, invoice issued amounting to 950,000 had completely been omitted from the records as of 30 September 2017. Number 8, provision is to be made for outstanding debenture interest and corporation tax of 22,975,000. In number 9, the directors have proposed a final dividend of 2.5 per share. The directors have proposed a final dividend of 2 shillings, 2.5 per share. So required income statement for the year ended at 30 September 2017, 12 marks, and the statement of financial position at 30 September 2017, 8 marks. Total marks 20. So it's a very important question. So we're going to write the title, Nightshade Limited. So this one is November. Is it November? November 2017, question number 4. So this is a question you are doing. So you write the title here, Nightshade Limited. Limited. So you have 2 columns here. We have shillings and thousands, and then here shillings and thousands. So you have 2 columns. I have 2 columns, shillings and thousand. So we start with the figure for sales. So the figure for sales is how much? Yeah. 1,507.05, isn't it? Then we had been told in note number omitted invoice. We had been told there's an omitted invoice. Note number 7, invoice issued amounting to 950,000 had completely been omitted from the records. So when you issue invoice, it means those are sales made. So we have 2 kinds of invoices. We have the incoming invoices and outgoing invoices. So when you issue, it means outgoing. Therefore, you're issuing to your customers, isn't it? So if they are omitted invoices, then it means they are part of the sales to customers that have not been recorded. So you add them to the sales. Are we together? So we have incoming, those ones are coming from creditors or suppliers. Then we have outgoing, those ones are going to the debtors. Debtors are those customers that we sell to on credit. Are we together? So now here, our sales value is how much? 1574. So 15,740 plus the one that are omitted, how much? 950. So we're going to add this one. What do we get? 15. So 1575,000, isn't it? 1575,000. And then we check if we have the return invoice. Return invoice are part of the sales that are being returned. We don't have return invoice in this question. Then we are going to less cost of sales. Sorry? We're going to less cost of. So we have opening inventory. Opening inventory is how much? 91,000. Can you be able to see it? And then we are going to add purchases. We're going to add purchases. So there's adjustment to purchases. There's adjustment to which is note number 1. What does it say? So we have goods that had been purchased which are in transit and they had not been recorded in the books, isn't it? So they are goods purchased, they are on transit coming, isn't it? So we're going to add them to the current value of purchases. So our purchases is 12,04,000, is it so? Plus 710. What do you get? 1204. 710. So 1204 710. So that one is going to give us what we call goods available for sale. How much is it? $12.95.7. Then you're going to less closing stock. Our closing stock is how much? Our closing stock is how much? 11, 112, 300, isn't it? 112, 300 plus 710. These goods that were on transit. Plus 7, the goods that were on transit, isn't it? So the goods, if you buy goods, you add to your purchases. Then they also add to the inventory if they have not been sold, isn't it? You buy goods, these goods, if you have them in your business, at the end of the period when you have not sold them, they have become part of your stocks, isn't it? So these ones have not been sold, so they will be part of the stock. So how much will that be? 710. These goods that had not yet been recorded. Yours, 113010. So you subtract that one, you get the cost of sales. Unakuja ngapi? 1182,700. So you get the gross profit here. So you take this figure minus this. What do you get? 392,300. Then we check if we have any other incomes. We check if you have any other incomes. We have discount. So we have discount received. So we add here discount we received. How much is the discount received? 8,300. Then here we have the total income here, which is how much? 400, 600. Then now we list expenses. We start with those expenses that require adjustments. We start with those expenses that, on the receivables, on the provisions. Yeah, that one we can leave some space there in case, just in case, isn't it? In case it increases or, but in the meantime, we can look at other adjustments, isn't it? We can even start with that allowance for doubtful dates, isn't it? Allowance for doubtful dates. So what other, okay, we've already tackled note number 1. In our notes, additional information, we've already done note number 1. And then we have also used note number 2. And then note number 3. A data what the company 1500 was declared bankrupt. This has not been written off, isn't it? So here we have bad debts written off. First of all, bad debts written off. That is an expense on its own. How much is it? 15? So this is 1500. Then we can have some adjustments here. We can have some adjustments here. We can have some adjustments, So we have debtors. Debtors are those credit customers. So we have balance put down. The one that is indicated the trial balance. Debtors, balance put down is how much for debtors? The one that is indicated the trial balance. Sorry? 136. So the amount indicated is 136,500, isn't it? And then we are going to add in omitted invoices. These are omitted, they are issued, but they are omitted, so they are not recorded, isn't it? So when you issue out, when you sell on credit, when you sell on credit, you increase the value of debtors. You debit debtors and you credit sales, isn't it? No, this is sales. When you sell on credit, what is the double entry for that? You debit debtors are increasing, isn't it? And then you credit your sales. To credit sales means to increase the value of sales, which you have done here successfully. Then here you come here and add omitted invoices here. Omitted invoices 950, isn't it? And then we less bad debts. Bad debts, how much? Bad debts 1500. So when we have bad debts in the additional information, it means not yet adjusted the way it's supposed to be adjusted, isn't it? So it has not been adjusted. When you have bad debts in the additional information, it means those debtors have not been adjusted accordingly. So what is the adjustments? You credit debtors, you reduce the value of debtors, and then you increase, you debit expense by bad debt, isn't it? That is the adjustment for bad debts. So what do you get? What is the value of debtors here? 135, 950. So this is the true value of debtors, isn't it? And then they said we less allowance for doubtful dates. Allowance for doubtful dates, allowance for doubtful dates. Allowance for doubtful dates, which is 2%, 135, 950. Those ones that are already in the trial balance have been adjusted. So those ones you only add to this one. So this one, first of all, we can delete this one. If you have bad dates, the additional information, first of all, you adjust them by reducing them from the debtor's value. And then in case we have other bad dates indicated in the trial balance, you combine them together as an expense. So it increases the value that is already in the trial balance. But also that one in the trial balance has already been adjusted. It has already been tunaelewana. So if you have bad dates in the additional information, it means not yet adjusted. So you adjust it. How do you adjust it? You reduce the value of debtors by the same value, and then you increase the value of bad debts. So in other words, you add to the one that is already in the trial balance. So now this one will be how much? Sorry? 2% of this one is 2719, isn't it? Yeah. And then you opening balance. Opening balance. We have bad debts in the trial balance. Yeah. We don't have trial balance in the trial balance, is it? So those ones, so that is an increase, the past creation, isn't it? So it is an expense. So bad debts written off itakuwa ngapi? Itakuwa 1500 plus 1500 plus ile iko kwa trial balance ni ngapi? 3050. 3050. So total how much? 45? Is it 4550? Eh? We are here on bad dates. We are saying these bad dates are already in the trial balance. This one have been adjusted accordingly, isn't it? So you add to this one that was in the additional information to make the total 4550. And then we have allowance for doubtful dates. We said allowance for doubtful dates. If you're creating for the first time, the entire amount is an expense. How do you know that you're creating it for the first time? We don't have any value of the same in the trial balance, isn't it? So we write here allowance for doubtful. Allowance for doubtful debts, which is how much? 2719. Allowance for doubtful debts. Tumeelewana? So we are through with the note number 2, number 4, and number 3 and 4 already done now. Depreciation has been provided on motor vehicle at the rate of 20% per annum. So right here, depreciation, motor vehicle. I'm just writing MV to indicate motor vehicle, isn't it? At cost. So you take 20% of 60,000. What is the value? 12,000. So right here, 12,000. We are through with the note number 5. You start with those adjustments in the additional information. And mostly the adjustments, we know what they taste. Note number 6, at 30 September 2017, outstanding motor vehicle expenses amounted to, so motor vehicle expenses here. So right here, motor vehicle expenses. So the one that is already paid is 44.75. This one is a trial balance plus owing. Owing or outstanding is the same thing. So owing is how much? 120. So you add 125. So what do you get? Eh? What do you get? 4,600, isn't it? So you get 4,600. And then we have also, we have insurance. While prepaid insurance amounted to, so we have insurance here. The one that is paid is how much? 71. And then we deduct the prepayment. Prepayment is how much? 1150. Sorry? It's how much? 6,000. So here you write 6,000 for insurance. We are through with the note number 6. Note number 7, you've already done it partially. And then provision is to be made for outstanding debenture interest at corporation and corporation taxes. So we said debenture is a loan to the company. A debenture is a loan to the company. So we check. So they have written there 8% debenture. So it means the value that is indicated as for debenture is 60,000. And then 8% of that amount is supposed to be the interest to be paid on that loan, isn't it? So 8% of 60,000 is how much? 8% of 60,000. 40. So the total interest that is supposed to pay is 4,800, isn't it? Then you check from the trial balance if they have paid any of those amounts. If they have not paid, then it means the entire amount is accruing, it's still outstanding, isn't it? And then we have debenture interest paid. So they have paid. So we have here debenture interest. So they have paid 24. They have only paid the half of the interest. So meaning the other half is still outstanding. To make it 4,800. So you check if they have paid anything. How do you know that they have paid anything? The amount that is paid will be indicated in the trial balance. If there is no any indication, if there is no any amount for debenture interest in the trial balance, then it means the entire amount is outstanding. So you should take that portion that is outstanding to the balance sheet as current liability. So how much is the remaining? The remaining is? So I'm writing here, this is paid, and this is outstanding. Eh? So which is 4,800, is it so? So what is your question? No, here we are listing everything that is paid and unpaid. Expenses, we capture everything so long as they incurred in that period. Expenses for that period must be recognized in the income statement, whether paid or not paid. That is what we say agreed. So these other ones, they have also been paid, isn't it? The one that you are seeing here, like this one, motor vehicle expenses, this one is paid. This one is not yet paid. But the entire amount must be reflected, isn't it? Insurance, this one is paid, but the one that is not for the current period is eliminated, isn't it? That is what we call accrual concept of accounting. Accrual concept of accounting states that income and expenses must be recognized in the period incurred and earned, whether received or not paid for, isn't it? Tunaendelea, tumemalizana na note number. We are through with the note number 8 partially. And then note number 9 relates to appropriation. So you go to the trial balance and pick other expenses that do not require adjustments, isn't it? So we have other expenses that do not require adjustments. Like we have general expenses. How much is it? How much is it? 23, 25. Then we have salaries and wages. How much is it? 244, 150. And then we have motor vehicle expenses to remember now. We have electricity. Electricity, how much is it? 5,600. And then we have discount allowed. How much is it? 10,900. And then we have also director's fees. How much is it? 40,000. What else do you have? So those are the expenses we Tunaelewana? And then now we add all the expenses. We add all the expenses. We add all the expenses. Can we add? So we are adding all the expenses. 33. 144. Another one. 337, 644. So we're having two different answers. 337. 337, 644. So the answer we get here is called profit before tax. Itakuwa ngapi? The difference. Answer here is profit before tax. What is it? Profit before tax. 62. 62, 950. 62, 956. And then we less tax. We said for tax, if you've not been given the value for tax, you take 30%, isn't it? So in this question, you've been given the value for tax, which is how much? Sorry? 22,970. So you less 22,975. So you get your profit after tax. What is the value for that? 39. 39,980. You can add retained earnings. You can start with retained earnings balance put down. Retained earnings balance put down, you get it in the trial balance. Sometimes they call it revenue reserves. Revenue? Retained earnings balance put down, you get it in the trial balance. How much is it? 66? 66,700. 66,700. And then you less dividend paid. We have dividend. We have dividend paid is how much? That one is in the trial balance. The dividend paid in the trial balance is how much? 7,000. Can you be able to see? Proposed or final. Call it proposed or final dividend. Umeona hiyo 7,000. So they are proposing to pay a dividend, a final dividend of how much? 2.5. Can you see it? The directors have proposed a final dividend of 2.5. 2 point. So you go to the ordinary share capital. Ordinary share capital, isn't it? So the total value for shares is 160,000. 160. Each share is valued at 40. You divide by 40 to get the number of shares, and then you multiply by 250. Inakuja ngapi? 1 million or 10,000. Multiply by 2.5. 10,000, isn't it? So you minus here 10,000. So you get the retained profit balance carried, retained earnings balance carried down. This figure here, what do you get? Retained earnings balance carried down. Ingapi? $89, 681. And then you write your Nightshade Limited. Statement of financial position as at 30th September 2017. So you start with the non-current assets. Sasa, you have an issue? Yes. Revenue reserve. Yeah, it is the profit balance brought down from the previous accounting period. Sasa, are we together? So we come here and write you have shillings and thousand here. So we start with non-current assets. Non-current asset, we said, are those assets that stays long in the business. So in this question, we have land and building. So we have land and buildings. Land and buildings. So the total value for land and buildings, we have no depreciation, it's 151,000. Have you seen it? And then we have motor vehicles. We have motor vehicles. The cost is how much? 60,000 minus in bracket the accumulated. Accumulated depreciation means the previous depreciation, which is found in the trial balance, plus the current one. So the previous one is how much? The previous depreciation. What is 1200? 15? So it is 15,000 plus the current one, which is plus 12. So when you do that computation, what do you get? How much? 33,000. Tumeelewana? Nani ana swali? So those are the only non-current assets in this question. In some other questions, there can be more than 2 items. So you check all of them. Other non-current assets we know of includes items like furnitures and fittings, isn't it? Machinery, investment, sorry. And then here you list your current assets here. You list your current assets here. So your current assets, we have inventory, the closing inventory. You start with the closing inventory, which was 113,010, this one. And then we have trade accounts receivable. Accounts receivable was 135,950. 135 minus 27. So you must deduct the provision for bad debts from the total balance of receivables. The total balance of receivables, after you've adjusted for bad debts, if there is any provision you are making, you adjust. Provision means you are standing in for those ones. In case they don't pay, you pay for them by deducting your income statement, isn't it? So you reduce those that the business is standing for. 130? 133, 231. Is it so? And then we have prepaid insurance. We have prepaid insurance. How much is it? Prepaid insurance was how much? 1150. We have bank balance. We have bank balance. How much is it? 42,200. And then we have cash. How much is it? 9,000. And then we have, those are the exhaustive, those are the total assets here. So we have total assets. And then we have capital and liabilities. We have capital and liabilities. So capital and liabilities, we have ordinary share capital. Ordinary share capital. Ordinary share capital is how much? 160,000. So you write here 160,000. And then we have share premium. We said, what is a share premium? Share premium, we said, is when the shares are sold at a price above the book value. The amount that is above the book value is called share premium. So for instance, if the company value their shares at 10 shillings, then upon selling the same, the market demand, because of the more demand of their shares, this extra addition of 2 shillings. So we're saying that extra amount, that is called share premium. Share premium hapo ni ngapi? Share premium ni ngapi? 36? So 36,000. That is share premium. And then we have retained earnings balance carried down or revenue reserve. Retained earnings, this one, 89,681. So those are there. And then we have non-current liabilities. Non-current liabilities. Non-current liabilities, how much? We have debentures, 8% debentures, which is how much? 60,000. Then here we have current liabilities. We finish it up here. We have current liabilities. We have current liabilities. Current liabilities, tunagani? We have accounts payable. Accounts payable ni ngapi? $11? 100, 700. Accounts payable ni ngapi? 100, 700, sindio? Plus 710. 710 ilikuwa nini? Omitted invoices, isn't it? So when you buy goods on credit, the double entry for it is you debit your purchases and you credit your accounts payable, isn't it? So by debiting purchases, it means you increase the value of purchases and you also increase the value of payables. That is a double entry. In case you meet any invoice from from suppliers. So how much will this be in the end? 101? 101 for 10. 101 for 10. We also have outstanding motor vehicle expenses. You know what I'm happy? 125, this one. Sawa. Outstanding motor vehicle expenses, this one. Tulisema, we said, if you have an expense that is not yet paid for, and that expense has already been incurred, it is called outstanding. Another name for it is called owing, or not yet due, isn't it? Due means not yet paid. So that one should be captured in the statement of financial position as a liability. Any other one that you are forgetting? No. Discount allowed has already been paid. So we have proposed dividend. Proposed dividend. Discount received in income. Discount we shall receive, isn't it? Proposed dividend ngapi? This one, 10,000, not yet paid. And then I also told you tax is paid in the subsequent year, in the next year. Tax is how much? 22,975. So, and then accrued debenture interest. Accrued debenture interest, which was how much? 2,400. Do you have anything that you're forgetting? So that is total capital and liabilities. Total capital and liabilities. So can we add this one, another one to add that one? We see whether they balance. Total capital and liabilities. So another figure. Okay, you can, it's okay. What is the total here? 484. 590. 482. 590. Do you prefer writing or you want to take a screenshot of the same? You want to take a screenshot, isn't it? Faster. I'm giving you 2 minutes so that we can do another question, isn't it? We're also going to do November 2016 question number 1. November 2016 question number 1. Can I do away with this? November 2016 question number 1. Natafuta hii. Yes. Yes. tumesema debenture amechukua kuna loan ya 60,000. Don't the debenture loan is 60. That is the amount of loan, ndio? Then 8% of this amount is supposed to be paid as interest. 8% of 60,000 is how much? 48? 4,800, isn't it? 4,800. Is it so? They have only paid a half. A half of that is 2,004. The total interest is supposed to be paid is so the other half is still accruing or not yet paid. Not yet? Ushapata. So now we are doing another question, November 2016. Everybody is having that question, isn't it? November 2016, question number 1. The following trial balance was extracted from the books of accounts of Raha Limited as a 30th June 2016. So we have the trial balance indicated. Then we have additional information. At the end of the financial year, it was not possible to carry out stock take for inventory valuation. However, the normal profit margin is 20%. Number 2, on 30th June 2016, administrative costs included a prepayment of how much? 500,000. Insurance was paid on 1st July 2015, and it is to cover a period of 3 years in equal installment from that date. Note number 4, debtors amounting to 640,000 had been unable to pay by 30th June 2016. This amount should be written off. Number 5, the allowance for doubtful debt is maintained at 5% of the trade receivables at the end of each year. Number 6, depreciation is provided as follows. Machinery, 10% on straight line basis. Furniture, 20% on reducing balance basis. Number 7, the directors have proposed the following: a 6% dividend on ordinary shares, a final dividend on preference shares. A final dividend on preference shares. So required: A, income statement for the year ended 30th June 2016, 12 marks. And the statement of financial position as at 30th June 2016, 8 marks. So we want to do that question. We want to do that question very fast. So we're going to write the title, which is Raha Limited. Raha Limited income statement for the period ended. What is the ending period? 30th June 2016. And then we write here, which year is this? It is May or November? November. Question number 1. So November 2016, question number 1. So we can have 2 columns here, shillings and thousands. And then we're going to have here shillings and thousand. So we have the sales figure. What is the sales figure? What is the sales figure? Sales is 91,000. So we write here 91,000, isn't it? And then we don't have returning news. Neither do we have any adjustments that affect sales. So we less cost of sales here. We less cost of opening stock. How much? 26,400. You add purchases. What is the value for purchases? So 68,000. Then you get what we call goods available for sale, which is how much? 94. Goods available for sale here, 94,400. Then you less closing stock. which is how much? Closing stock. Eh? Do you have closing stock? They have given us closing stock. Eh? We have the closing stock value. Addition for number one, isn't it? So here we can determine the value of closing stock here. Determination of closing stock. Determination of closing stock. Sawa. So we've been given the gross profit the normal profit margin is, so gross profit margin, GP margin. So when you apply margin to sales, you get the gross profit, okay? So when you apply margin to sales, you get the gross. Are we together? So 20 out of 100 times 91,000. How much is that? Eh? 18,200. 18,200. Everybody akompata hivyo. 18,200, isn't it? 18,200. So gross profit, it is sales minus cost of sales, isn't it? Sales minus, that is the formula for getting gross profit, isn't it? So our GP is 18,200 minus sales, which is 91,000. Cost of sales, we don't have the figure, isn't it? So we can our cost of sales is going to be 91,000 minus 18,200. What do you get? Huh? 7,200. 72,800. This is the cost of sales, isn't it? 72. Now, what is the formula for cost of sales? Is equals to opening stock plus purchases minus closing stock. Is it so? So we have our cost of sales, which is 72. Opening stock is 26. Our purchases is how much? 68,000. And then we don't have cost of closing stock, isn't it? Tumeelewana? Tumesema hapa, if you have the margin, if you apply margin to sales, you get what we call the gross. I'm repeating. If you have been given the margin, the way you have been given, if you apply margin to the sales, you get the gross profit, isn't it? We all know the formula for gross profit, which is sales minus cost of sales, isn't it? So we have our gross profit, we have our sales. We don't have cost of sales. So this one crosses the equal sign and becomes positive. This other one crosses and becomes negative. So our cost of sales will be 72,800. So what is the formula of getting the cost of sales? The opening stock plus purchases minus closing stock, isn't it? We have our cost of sales, we have our opening stock, and then we have our purchases, isn't it? What is missing is closing stock. So closing stock crosses the other side and becomes positive, isn't it? So we have closing stock here is going to be 26,264 plus 68,000 minus. So our closing stock itakuja ngapi? Sorry? 21,600. Sijui kama tumepatana. Nani hajaelewa? Umeelewa? Haya. So our closing stock here is 21,600. So when you deduct that, what do you get? $72. So we have 72,800 here. And then here we have the gross profit. So when you subtract those two, what do you get? 18,200. You add discount received. Do you have discount received? Discount received ngapi? 11. Is it 1,100? Total incomes how much? 19,300. And then you list your expenses here. You list your expenses. Tunaelewana? We go to the additional information. We find out the expenses that require adjustments. Note number 2. On 30th June 2016, administrative cost included prepayment of how much? 500, isn't it? So how much is the administrative cost? So right here, administrative expenses, admin expenses. The total amount paid is how much? 5,300. Prepaid amount is how much? 500. So how much do you get? 1,500. 4,800. So when I get up 48, tumeelewana? So we go to note number 2. Insurance was paid on 1st July 2015, and it covers a period of 3 years in equal installment. A period of 3 years in equal from that date. So it covers a period of how many years? 3 years. So we divide by 3. 12,600 we divide by. Is it 12,600? The amount of insurance, how much? Insurance paid. Insurance equal to 2,100. Divide that amount by 3. 7. So 700 per year. So we're going to write here insurance. The amount that was paid is 2,100, isn't it? So 1,400 is prepaid. 1,400 is Sinigweli. 700 plus 700, 1,400. Nakuja ngapi? 700. Hiyo ndio in prepaid. Last item on the trial balance. Sawa. Tunaenda note number 4. Debtors amounted to 650 had been unable to pay. So debtors had been unable to pay. This amount should be written off. So we come here, this is working number 1. And then we have now working number 2. Debtors, we have debtors here. So balance brought down is how much? The one that is indicated the trial balance for debtors. We call them accounts receivables. Trade receivables. Balance brought down 14,640. And then bad debts. Bad debts ngapi? 640. So balance inakuwa ngapi? 14,000. Allowance for doubtful debts. Allowance for doubtful debts to be maintained at 5% of 14,000, which is 700. So 700, sindio? So we check allowance for doubtful debts 610. So say increase for allowance for doubtful debt. Increase allowance for bad debts. Increase allowance for doubtful debts, you'll get 710 minus 610. It may increase now how much? So the balance carried down is this one. 5% of the remaining debtors. And then you compare with the, which is yes, minus the opening balance, which is you compare with the opening balance. Oh, 700. Hapa ni 700, So you minus 1690. Is it 90? Sawa. Tumemalizana na which note? So we are through the note number 5. And then we go to note number 7. Sorry, note number 5, note number 6. So depreciation machinery. Depreciation machinery is 10% straight line. 10% Straight line. What is the value for machinery? Straight line means on cost, which is 6,000. This is 600. Is it so? Tumeelewana? Machinery 18,000. Oh, machinery 18,000. So 10% of 18,000, how much is it? 1,400. 1,800. And then we have depreciation for furniture. 20% reducing. So 20% in bracket, the cost is how much? 6,000 minus accumulated 2160. 768. So this one is going to be 768. So we are through with the note number 6. Note number 7 relates to appropriation. So that one will deal with it later on. So we go and pick other expenses that do not require adjustments. Like we have discount allowed. How much is it? 1350. And then we have selling and distribution expenses. Selling and distribution. How much is selling and distribution? 27? 2750. Debenture interest. Debenture interest, how much is it? Remember, I told you debenture, you check the total interest that you're supposed to pay in the whole year. How do you know the rate that is indicated before the word debenture vis-a-vis the actual amount? So 8% of 2,000 is how much? How much? 160, isn't it? So we have no anyway they have indicated debenture interest in the trial balance. Is it so? So it means the entire amount is accruing. The entire amount is not yet paid. Tunaelewana? So when you add all those, what do you get? Tulikuwa tumesahau kuna ile bad dates. Bad dates ile tulikuwa tumeweka kweli. This bad dates here 640. Bad dates of 640 we had. Bad dates 640, isn't it? Your bad dates 640 tulikuwa tumesahau. 13? 13 is 58. So 13,058. So this one will get profit before tax. Profit before? So profit before tax. Profit before? Which is how much? $19,300 minus 13,058. How much is that? 62. And then we less tax. Tax at 30%. 30% of that one is how much? 1872.6. Is it so? Profit after tax. You get profit after tax. Kuja ngapi? Anakuja ngapi? 43, 69.4, like that. And then we add retained earnings balance brought down. Add retained earnings balance brought down. Retained earnings balance brought down from the trial balance, how much? 12,330, isn't it? And then we less we less preference dividend. Preference dividend. We have preference dividend. Preference dividend. We have the one that is paid. The one that is paid. Where do you get the one that is paid? You get the trial balance. Trial. Do we have any dividend that is interim dividend? Preference how much? 800. So you less 800 here. And then you less proposed. Proposed. So proposed, you go to note number 7. A final dividend on preference shares. A final dividend on preference. So the total value for preference shares is 20,000, indicating the trial balance. Can everybody see it? The trial balance, you have indicated the total value of preference shares of 20. So it means 10% of 20,000 is supposed to be the dividend that is paid to these shareholders. So 10% of 10% of 20,000 is how much? 2,000. Is it 2,000? 2,000. They have only paid 800. So they're proposed to be how much? 1,200. So proposed to be how much? 1,200 to make 2,000. They have only paid portion of it. That is, and then you're going to less ordinary dividend. Paid in ngapi? Paid indicated the trial balance. The one that is paid is 1,200. And then 6% proposed. Proposed is 6% of the ordinary shares, which is 30,000. 6% of 30,000 is how much? 6% of 30,000. 6% of 30,000. 180. So you minus 180. 1,800 or 180? 180. 180. 1,800, isn't it? So we don't have transfers to general reserve. So you get here what we call retained earnings balance carried down. Unapata ngapi? Retained earnings balance carried down. So you're taking this figure, you add this, and then you subtract all those. What do you get? 11,699 point. Is she correct? So here we write for Raha Limited. Statement of financial position as at 30th June 2016. So we have non-current assets. Non-current assets. So we have freehold property. Freehold. Can you see it? Freehold property ngapi? How much is it? 28,000. And then we have machinery. What is the cost of machinery? 18,000 minus accumulated depreciation. Provision for depreciation of machinery is how much? 5,400. Yes. Yeah, which question? Ordinary shares, they don't have a fixed rate of dividend. Our kona fixed. Preference shares have fixed rates. So the fixed rate in this question is 10% of the total value, isn't it? 10% of the total, which is 2,000. 2,000 have already been paid 800. So remaining is how much? 1,200. But for the ordinary shares, they only determine it arbitrarily. isn't it? So the determination is they have already been paid 1,200, isn't it? Then the companies also decided at the end they should also be added another 6%. So they don't have fixed rate. So they determine arbitrarily. So they determined at 6% the final one, although they had already paid them some dividend earlier on of 1,200, and then you give them another one of 6%. For preference shareholder, they have a fixed rate. A fixed rate of how much? In this question, it was 10%. I don't know whether I've answered your question. So now here, machinery, the provision for depreciation is how much? 5,400. Is it so? Are we together? Ama mnataka niende? Do you want me to go? Depreciation hapa ni ngapi? Is it 1,800 plus 1,800, 5,400 plus? How much do you get? 10,800. So 10,800. We have furniture. Furniture, the total cost is how much? 6,000. And then the accumulated depreciation is how much? For furniture? 2160, isn't it? So 2160 plus 768, isn't it? Which becomes now how much? 3072. I hope you are following. Those are the only non-current assets we have in this question. Then we have current assets. We have current assets. We have inventory. How much is the value of inventory? Closing inventory. Inventory is how much? 21,600. And then we have trade receivables. Trade receivables tulikuwa na 14,000 minus 700. What do you get? 13,300. And then we have prepaid insurance. Prepaid insurance, how much? 1,400. And then we have prepaid admin expenses. How much? 500. And then we have bank balance. Bank and cash, how much? Is it 2,100? Total assets. And then you write capital and liabilities. Capital and liabilities. So we have ordinary share capital. Ordinary share capital ni ngapi? $30,000. Preference share capital ngapi? Preference share capital ngapi? 20,000. And then we have which other? Share premium. Share premium. 5,000. Retained earnings. 16, 11, 699.4. And then we have non-current liabilities. Non-current liabilities, which is debentures. How much is it? Debenture 2,000. Is it 2,000? Huh? The budget is 2,000. 2,000. And then here we have current liabilities. Current liabilities. Moja ni gani? Or I write here current liabilities, isn't it? Current liabilities. Let me write here. Current liabilities. We have trade payables. How much is it? 7,200. 7,200. What else do we have? Proposed dividend. Proposed dividend. Proposed dividend is 1,200 plus 1,200 plus 1,800. That is how much? 3,000. Is it 3,000? 3,000. What else do we have? We have the debenture interest. Was it paid? So the debenture interest was paid. It's not accrued. It was paid, isn't it? This one 60 is there in the trial balance. Where is it? Iko trial balance. So ililipwa. Haiko sasa. So I think those are the only one that we have. And then we have tax. Tax is how much? 172, 1872.6. This one. So can we add, see whether it balances off? So this is the total assets and total capital. Imebalance. Ngapi? 8770. Hata hapa. 8772. Sasa. So tumefanya hizo swali. Sasa ni wakati wako wa kujaribu pia maswali. Si kweli? Baya nyinyi mtafanya. Mtafanya? So utajaribu. We'll try May 2021 question number 4. May 2021 question number 4 assignment. Assignment May 2021 question number 4. May 2021 question number 4. And then November 2019 question number 3B. November 2019 question number 3B. So that one will bring us to the end of that topic. Next time we'll be looking at manufacturing accounts in the next class. The next class we'll be looking at manufacturing